Good morning, everybody. It is 8:11 a.m. and it's October 30th. Welcome to my channel. Oh boy, our markets, huh? So, yesterday we had FOMC. It's kind of a nothing burger. We all expected a quarter point cut. That's what we got. And then we had some volatility on Jerome Powell saying that something like the cut is not guaranteed in December. That brought down the markets a little bit. Then the market recovered. So again, we're here. Kind of a nothing burger. Okay, even the SPY closed unchanged from the previous day, pretty much. So that brings us to a ton of earnings that came out. Now Meta really missed EPS, and they're down almost 10% this morning. That's a pretty big move in Meta. Microsoft beat earnings, but people are nervous about the capex spending in AI data center buildouts. They are down 2%. Okay. On the other end, you have Google, lights out earnings, up almost 9% this morning. Okay, Eli Lilly reported this morning, they're up 3.5%. So those are the heavyweights that reported. Okay, and that brings us to today. Now, what I'm liking right now, finally, is relative volume is up today. All week, it's been horrible with volume. So if we look at relative volume right now, 143%, 156%, that's what I want to see. That's what I want to see. That will bring some nice tempo to the market. That is what I want to see. All right. I have not traded futures all week. It's been horrible. It has not been great opportunities. Now, don't get me wrong. If you made money, congratulations. But in my style, what I like to see, this is not a market I like for the way I like to trade. And that's just how I look at the markets, right? Doesn't mean you need to follow what I'm doing. But for me, big growth because I haven't taken one futures trade. This doesn't make sense. Why am I going to put my risk out there when I'm just good, what, to have fun? Doesn't really make sense. Now, today, hopefully, we get some nice moves. Okay. And today, we have big more earnings. Amazon and Apple are reporting after the close. After that's done, the big boys, besides Nvidia and AMD, would have reported. Okay. So, without further ado, welcome to my channel. My name is Stephen Gonzalez. I use market profile and volume profile to find structure in the markets. I'm on supply and demand, gamma exposure levels, the most traded price of the year, the month, the week, and the previous day. That is my edge. That's the way I look at markets and game plan markets. Also use anchored VWAPs and market internals. When the market opens, tells me how strong or weak or what's the capability of the markets. Bookmap helps me execute on futures day trades. Okay, and then of course I use my weekly expected move indicator to just let me know what's priced in the market for the range for the week. 70% of the time, all stocks close within that expected move. 70% of the time. That is a good edge to have. Okay, that is a very good edge to have. Now, QQQ broke its expected move to the upside yesterday. Also, Broadcom broke its expected move to the upside. Berkshire Hathaway broke its expected move to the downside. Nvidia broke its expected move to the upside. And that's about it. Other big moves, obviously, is because when I run my script, it takes account in the IV, obviously, and earnings, right? So Meta had a huge move, but it's not beating its expected move to the downside because of earnings, right? It's 659. Currently, it's at 680. So my script takes in account the earnings. Okay, so that's why if stock has earnings this week, the ranges will be bigger. Okay, now, hopefully you join me every day. Okay, every morning I do this. All right, give you the market story, the market news, the economic calendar, just basically a lot of technical analysis. All right, and I also give you long and short trade scenarios in Nasdaq and ES futures. Okay. Now, if you want more in depth, you're going to join my Discord. That's Confluence Trading. Go to the YouTube homepage, click on the link, sign up. What are you waiting for? You'll get my live commentary. Now, this week, like I said, I haven't taken a trade, so I've been light in, I'm not going to sit here and analyze a market, okay? I'm not going to sit here and analyze a market where there's no edge for me in it. So I've been really looking at tickers to do some option strategies on. Now, what makes this week not the best, right, is that what am I going to do? Put a trade on in one of the like Mag 7s or something. So I like to trade a lot. When all these big earnings are out, it just doesn't make sense. When FOMC was coming out, it just doesn't make sense. So now FOMC is gone, okay? And I just can't wait for these earnings to be done after the market closed today, because then most of them are out of the way besides AMD and NVIDIA. Then the market should, okay, because this is a big week. So that's what stinks, is like you can't really have much confidence. Now, don't get me wrong, other stocks that are not so heavily a similar beta to the SPY will have their own story, right? And I also look at those as well. But just a lot of those stocks have earnings coming. So I feel very constrained this week. Very constrained on like what I want to trade. Okay? Now I missed my gold short, I missed my crude long. I've missed a lot. Even I took a spread off the other day for GDX. I had a back spread on. That was up almost triple, more than triple my spread the next day, even though I took it off the day before because I didn't think the spread was right. And it was right to get that off, but then it pulled back. So I would have had to took profits, but that seems to just be what's happening to me lately. Frustrating, but that's just the way it is. Very frustrating not having a futures trade this week. And all these big earnings and FOMC, it just makes me like, why am I going to put risk out there? It doesn't make sense, right? So just wanted to share that with you. Now, let's get right into the futures watch list here. Now, FOMC is done. We just have Apple, Amazon after the close. Okay, so here's the futures watch list. All right, 10-year yield is pumping today. We're back over 4% yields. So that's pretty interesting. That, if this continues to move up, should raise the mortgage rates. Again, because the mortgage rates are very sensitive to the 10-year yield. Even though they went down on a cut, I noticed two things yesterday. All right, and we'll get into it in a second. Real estate sector took a bloodbath yesterday. We'll look at that in a little bit. 10-year yield went up, okay? And you'll see a chart. It went up 4%, almost 4.10, okay? That should raise mortgage rates. Real estate went down. And now this could only be, like I'm saying, when Jerome Powell said, another cut is not really baked in yet. Real estate really took a downturn yesterday. That's the only thing I can surmise from it. 10-year yield went up, mortgage rate's going to go up, maybe not another cut. Real estate sector went lower yesterday. Okay? So, very, very interesting. Okay? Now, let's get into the rest of this. Dollar is up. Russell is pretty much flat. Silver is down 0.10. ES down 0.14. Nasdaq down 0.17. This is a lot of muted action today, but the volume's there. Okay, Dow's down 3.39. 30-year bonds are being sold, which are going to raise the yield. Ethereum down 0.90. Crude, thought you had a move in crude, and it's been pushing back with OPEC expected to raise their output. Bitcoin down 1%. VIX down 4.91. So a lot of steam came out of the VIX. Now that FOMC is behind us, now we just have, like I said, Apple and Amazon. Okay, let's look at the Mag 7 Plus. What is going on here? Well, you had Google, Alphabet's earnings, lights out. They're up 8.57%. Eli Lilly up 3.48. They also reported. Apple reports today after the close. Okay, they're up 0.70 right now. Now there's a bunch of laggards here. Let's go to maybe over 75%. We got Tesla down 0.76. Amazon down 0.77. Netflix, I've been eyeing a short on Netflix, and I'm really in the middle here. I almost put it on, but like I said, I waited, and I'll still wait. All right, I'm either looking at a quick short, or if this literally goes without me, looking at a long, believe it or not. Okay. AMD down 0.90. Okay. Microsoft with their earnings yesterday. Remember what I told you? People are nervous about all the money they're spending in the data center build outs, right? They had lights out earnings, but they didn't like the spending. Okay. So they are down 2.26%. And then Meta is the big one. All right. They had an EPS of like 1 point something, and it was supposed to be like 6. Huge miss there. There was some kind of tax or some kind of something that caused that. But that they're down big. Okay, they're down big. All right, moving on to the top sectors. Is there anything here? Oracle has been getting hurt. Okay, if you look at that chart, there's a gap below Oracle, trying to hold on to that 50-day moving average. Holding on for dear life there. Okay, let's look at the granular list here, because there's always stuff moving, right? I believe this is Cardinal Health, up 9.44. Crocs, the shoes, up 0.63. I think this is Bosch Health, up 6.78. Viking Therapeutics up 6.47. Shake Shack up 5.78. ServiceNow up 3.49. Moving on to laggards. Woo! Chipotle getting smoked. They didn't have the best earnings. Okay. Baxter down 13.16. I believe they reported earnings. eBay's down 8.58%. Carvana had earnings as well, down 8.5%. Tandem Therapeutics, or Tandem, not Therapeutics, Dynamics. They are Transmedics. That's it. I'm sorry. Down 7.69%. Honeywell down 5.12. Oklo down 4.53. Okay. Starbucks reported earnings. They're down 3.48. MGM down 3.24. Merck down 2.63. All right. So we have some movers into the red there. Moving on to sectors. Leading our pack this morning is healthcare. That's your Eli Lilly, up 0.43, followed by communications. That's your Google. And we have a bunch of red here. Real estate's still red. Industrial's red. Technology down 0.40. Basic materials down 0.53. And your laggard is discretionary. Discretionary. That's your Amazon, your Tesla, your Home Depot, your McDonald's. Those are your discretionary. Okay? That's what's going on in sectors. And we'll move on to the economic calendar here. Whoops. All right, so today Fed Bowman speaks at 9:55 a.m. Fed Logan speaks at 1:15, and we don't have GDP or jobs claims because the government is shut down. Okay, let's look at the juice. Is Trump doing anything today? And he met with Xi, and there wasn't. It just says China has agreed to continue flow of rare earth, critical minerals, magnets openly and freely. China's President Xi in a meeting with Trump via translator. Trade teams have reached a basis consensus. Trump, we already agreed to many things. All right, so that seems to be okay. Oh, looks like MasterCard had earnings. Let's see here. Nothing with Trump today so far, what I see. Stock news. Actually, let's go to the earnings calendar just so we're on the same page here. This morning, Eli Lilly, Mark, Comcast, Roblox. Okay. After the close, Amazon, Apple, Coinbase, Reddit, Western Digital, Riot, Cloudflare, Roku. Okay. Tomorrow, AbbVie, Exxon, and Chevron. All right. So we're going to go on to some stock news. Meta. Stock slump 8.6 after the social media giant said it would aggressively push to increase its spending to support its pursuit of AI can surpass human intelligence. Microsoft stock dropped 2% after the software giant said AI spending during the current fiscal year will likely be greater than previously estimated, and it's racing to keep up with runaway demand. Alphabet stock gained 7.5 after the Google parent's third quarter revenue reached a record high, while net profits soared 33% versus a year ago to roughly $35 billion. Let's see here. Eli Lilly stock gained 5.2 after the drug maker lifted its full-year revenue guidance, thanks in part to strong demand for its Zepbound weight loss treatment. Merck stock fell 2.5 after the drug maker posted higher third-quarter revenue as growth from its blockbuster cancer drug Keytruda offset falling sales from human papillomavirus vaccine Gardasil in China. Estee Lauder stock soared 5.4 after the beauty company beat estimates. Biogen stock fell 3% after the biotech company cut its full-year earnings guidance. Okay, let's move on to more news. Let's see here. We just talked about all this stuff. Only going to mention stuff that I haven't heard. See, NVIDIA, U.S. President Donald Trump may have teased that he could discuss NVIDIA's state-of-the-art artificial intelligence Blackwell chips with China's President Xi Jinping. Something might have just happened in the market. Let's see what time it is. 8:28. We're kind of getting a little bit of a nice selling here in an hourly chart. Let's see here. See, Starbucks, the company posted its first quarter of gains in comparable sales after nearly a year and a half, led by international markets, but margin took a hit from the surging coffee bean cost. Okay, something must have just happened. Something must have just hit the news wires, possibly. Let's look at that for a sec. I'm going to look here. All right, no, I'm not seeing anything on that news feed. Let me see another one. I don't see anything. It looks like Besant was talking at 7:35 a.m. Let's see here what he has to say. The U.S. shutdown is starting to eat into the American economy. Imagine we would have Fed chair candidate by Christmas. I applaud the 25 basis Fed cut, but don't like the language. I am very optimistic for 2026 growth and inflation levels. Job growth will rebound very strongly. I don't see. It may just be straight technical. I don't see anything outlandish here. If anybody has anything that they want to tell me, let me know. Let's look if there's any upgrades and downgrades today. Let's see here. Coinbase got an upgrade, and they have earnings after the close. Warner Brothers upgrade. Downgrades. Boeing got a downgrade. Fiserv downgraded. Bunch of firms downgraded Fiserv. Meta downgraded. think we're done there. Let's look at the good old breadth. 20-day simple moving average here. Whoa, look at that, folks. This is what I was explaining about the market breadth yesterday. Okay, 35% of stocks are above their 20-day simple moving average. This is what I'm talking about. Now, 407 stocks move our market, 493. It almost doesn't matter what they do. But look at that. 35% of stocks are only above their 20-day simple moving average. That is not a good breadth. Okay, we're going to look at the 50 too. Okay, we'll do that in a second. Okay, so that's there. So a lot of things happened in sectors yesterday that I noticed. Okay, now remember, I always explain before we do anything right now is the internals. Okay, and ooh, man, I'm getting some selling right now. All right, so if we do internals, we'll just do a mark. Internals don't mean much to me yesterday. I'm just showing you breadth-wise again, right? So internals were nothing to. They just showed you the FOMC was coming, and then you got some weakness, right? And then yesterday, look at the equal weight was weaker than the market cap. So yesterday, nothing was really strong besides energy. Okay, off the open. But remember, this is how our market works. Infotech's 35%, financials is 14%. I'm just rounding up. Consumer discretionary is 14%, communications is 10%. Okay? Now, if you add these together, Infotech 35%, financials 14%. That's roughly 50% is financials and Infotech, right? Add another 10 is your the consumer discretionary. That's almost 60%. Add another 10, it's 70%. Okay, so what does this mean? Infotech is your Microsoft, your Apple, and your Nvidia. Financials is your Bank of America, Wells Fargo, Goldman Sachs, JP Morgan, Morgan Stanley. Consumer discretionary, that's your Amazon, your Tesla, your Home Depot. Communications is your Google, your Meta, your Netflix. That's what moves our markets. The names I just said. The whole rest of the market could not be great, like I just showed you. That's how the market works. And that's what gets displayed here every day in these bars. Okay? These are the internals of the market. The market cannot outperform internals. So when I see something here, I'm like, oh, right here, like right in this, the market's not going to go anywhere. Okay? Now, that being said, let's get into the daily charts. Okay? Let's get into the daily charts. Let's look at some expected moves. Okay? Now the expected move I have for my script today this week is 691.94. We did not reach that yet. Okay? We did close above this trend channel. Okay, and where are we now? 685. We are, zoom in here. We are 685.20 right here. We're at the lower 30 yesterday. Now what's below us? Big gap, right? A big gap. Let's look at the futures. Okay, we're setting up a nice balance area in futures with a bunch of wicks, right? And that's an inverse hammer right now. So we're setting up a balance area. Big move happened from balance, okay? We're starting, this is the fourth session in a row, we're in this area. Now remember, this is futures, so 23 hours, 23 hours, 23 hours, 23 hours. Okay? That's last week's highs. Here's a big gap from Sunday night. Okay? Now, let's look at the Qs. And we're going to get into the other breadth, right? Look at the Qs. Close right on an expected move to the upside. That is a red flag for me. 70% of the time, stocks close within inside their expected moves range. That is a little frothy. Doesn't mean it can't go higher. It just means that probability says it does not. Okay, where are we now? 633. We are almost at the midpoint of yesterday. Okay, let's look at futures. Now, you can see structurally the NASDAQ has been stronger, relatively stronger in structure than the ES. Notice ES has a nice balance area. This maybe has 3 days. Okay, but look at this inverse hammer right now. Okay, tried to go higher. Then we have the gap, last week's highs. Do we get a pullback? I don't know. I don't know. Okay, that's the daily charts. Now, we're going to get into the triple-headed monster, and like what I was talking about before. All right, so bring up the triple-headed monster. We're going to start off with the 10-year yield, and you'll see the nasty candle that's happening right now with yields. Okay, so look, this has been steadily moving down, right? Downtrend. Look at that candle from yesterday. Look at that. Boom. That is a big candle, right? And that just means people are selling bonds. You're hitting the 50-day moving average. You're hitting this trend line. Can it continue to go up? This will put pressure on mortgage rates. This will put pressure, okay, on mortgage rates, which will then put pressure on real estate. Okay, that is your yield. Remember, it's the inverse of the bond market. Okay, the inverse of the bond market. So let's look at the dollar. Remember what I talked about, right? This dollar's been really like basing out here. That is a long time to try to have this little double bottom here. This starts to move up. This will put pressure on equities and commodities and the metals. Okay, you can see the 50-day moving average is flat. The 100-day moving average is flat. The only thing here is sloping downward still is the 200-day moving average. Wow, what if we go back to 100? Like I said, I've been talking about this for a while. We're going to get a rally in the dollar. It's just a matter of when. Okay, a matter of when. This is a pretty nice move here. You need to take out the $100. Okay, 200-day moving average. If you take this out, see the structure here? You can really start to go. Now, let's look at the VIX. Here's our VIX. Pretty low, but it's getting some love right now. See that wick? So, I don't know. We just have to pay attention, okay? We have to pay attention. Now, as far as breadth, right? The overall market breadth. I showed you the stocks above the 20-day simple moving average was only like 30, I think it was 38%, right? Let's look at the 50-day. Stocks above their 50-day moving average. I think yesterday it was like 40, it was here. Now, we're at weaker, even weaker, and only 41% of the stocks in the S&P 500 are above their 50-day moving average. Look at this. Look at this. Let's see. Now, I could put the SPX on here, but look, when we get really low here, obviously, the S&P 500 goes boom, right? Those are the extremes. You can see around here. Those are extremes, all right? On the other side, look at the other extremes, 92% over to 50. Then you take a dip. Okay, that's why I like looking at this, right? But that is not a healthy rip-roaring market of the 500 stocks. It's just not. Okay, let's take it one step further. Let's look at the RSP. That's our equal weighted, right? Look at that thing. Down, down. Okay, down, down. And then the New York Stock Exchange, right? Let's look at that. And that also is going down. But remember the NASDAQ futures, NASDAQ 100, that's the QQQ is NASDAQ 100. But the NASDAQ composite, look at that. Look at that. Okay, that's gonna. It looks pretty similar to the Nasdaq 100, but this is actually like 3,500 stocks. Look at that. Isn't that crazy? That's a big disconnect, right? What happens if this bursts, this bubble? Pretty crazy, right? Let's look at real estate. Look what real estate did. This is pretty crazy. It was consolidating. Look at that, and then boom, gap down, boom. You hit your anchor VWAP from 2024. If this loses that, wow, this is a big level here, 4054 in real estate sector. Okay, big time. Another one I noticed yesterday was the staples market. Interesting. Look at Staples, got slammed yesterday. Slammed. Look way back here. 75.81 is a key support level. We broke the 2024 anchored VWAP. Okay. Slammed. Now, I think this is an opportunity possibly down at this level to look at some stocks. Okay. What caused this yesterday? Well, if you look at Costco, it's falling apart, right? Look at Costco, right? If you look at Walmart, also having a pullback. Oops, sorry. Look at Walmart here. Look at Walmart. Boom, boom, boom. And then PepsiCo is also hit its 2024 anchor VWAP and falling apart. All right. Now I want to see what Coca-Cola has done. Look at that. Boom. Okay. Very, very interesting. That's what I noticed. Now, healthcare looked like a buy possibly coming. Hit the 20-day simple moving average. You pull back right off the 2024 anchored VWAP. Came up, pulled back. Now Eli Lilly has got this thing to here at least. I don't know, right? And we'll top it off with financials. Also not this best day yesterday. Okay? Just wanted to show you guys that. Because, like, even though our market took a little dip, it pretty much closed unchanged, right? And of course, let's just go finally to the XLK, and that's the technology sector. That's 35% of our market cap weight. Okay? And we know this the way it looks. Where's money going? So, look at that compared to staples, real estate, financials. This is like another planet. But this moves our markets. If this starts the downturn, we could have something. Now, I know typically the end of the year is bullish. So, be interesting. Doesn't mean you can't get some type of correction. I don't know. I really don't. I really don't know. All right, so let's finally get into some hourly charts here. Finally get some. Let's go here. Do some hourlies. And you can clearly see this balance area that I talked about in the ES futures, okay? Clearly see it, okay? So we finally, look at all these little candles. You could just see relative volumes, bad, bad, bad until yesterday. Whoop. Now we got some nice volume and tempo, okay? So what are we looking at here? Well, you have a big demand zone here. That's pretty much the bulls have to defend it, right? You have a big gap and another gap, unfilled gaps in the market, okay? You tried a couple times to go higher here. Now you have some nice supply up here. So we do have the most traded price around 69.09. You want to call it 69.10s, okay? This could be the mean, possibly. It's the most traded price of the week. Let's really quickly put a volume profile on all of this. It's going to look probably very balanced, okay? So there's the most traded price. You can see it. That's why that box is there, okay? Your value area here, and the market's pushing down right now as we're speaking, okay? This is the test, right? Because look at the volume here. That's what I'm saying. This area needs to be defended. That 68.65 is a key support. And the gap. Do we fill that gap? I don't know. Okay. That's your ES. You got a nice balanced area forming. Now, let's move on to the NASDAQ. Let's look at the NASDAQ together. So this is your NASDAQ, okay? So right off the bat, I'm going to add a supply zone here. Okay, let's just do it right here. It's an hour supply zone. Right there. Okay, so same thing here. We tried to go higher in the overnights, right? And you do have kind of a head and shoulders here. Maybe a little shoulder, a head. Then you have this neckline here. We're right at it, okay? We're right at it. What is this bouncing off of? That's your week to date anchored VWAP right there to the tick, okay? You don't have the best structure right here. Almost got taken out yesterday, right? Really going to look at this little unfilled gap around 260s. That's an unfilled gap. Okay, and you have a ton of demand here. Now, what I'll explain to you here is once you pass this right here, I would say really like this, around the 25925s, you don't have the best structure here. All of this is really not the best. See how we kind of just pushed up like this? This could really get ugly, and you could take all this out. Now you have an unfilled gap here, an unfilled gap here, an unfilled gap here. Notice the void in the composite profile, okay? Notice the void. So, who knows what could happen? But the main thing here is you want to see the NASDAQ defend the 260s. Because if we do fill that gap, come in here and you do this, well, then we're going to be in balance and wait for Amazon, Apple. Okay? I'm just glad we got more of a normal market today. we're probably going to look to trade. Okay, because look, we're getting some nice volume here, taking out all these longs. Okay, that's your hourly charts. All right, let's move on to our market profile, volume profile, and get everybody out of here. All right, let's look at this together. And let's talk about the so we're getting some selling here, right? Right here. Price is right here. Remember, we're in this little miniature balance area. Okay? This profile is not the prettiest, but it pretty much shows balance. Okay? There's a lot of trading in here. A lot. All right? So 69.53 becomes an important level, right? That's a key resistance area. Now, the 69.08s right here is our most traded price of the week. That can become the mean in our like middle of a seesaw if the market defends this area with the gap here. Remember, the gap is right here to here. Okay? Now, this is pretty simple. Okay? How we're going to have to look at this. Okay? Got some key level here, right? That actually happens to be the value area low of yesterday. But we're below that. So really, it's your yesterday's lows, 68.82s. Okay? And you have to think Apple and Amazon's earnings after the close, that's going to be indecision. Okay? And Apple already hit all-time highs. They're not a big revenue grower as of late. So, I don't know. All right, so this is the levels we're going to look at. Bottom of this gap here in the ES. Okay, so let's get into scenarios. And we're going to start with the bull side. They're in control. Okay. So, first off, we have an unfilled gap. That starts at around 68.77. 68.77. Okay. Now, we also have yesterday's lows and see the gap. All right, so we have a big demand zone here. Remember, this is an unfilled gap. Now, what could happen is there could be a nice bear trap here. Okay, if we happen to fall and test, I'm gonna see how this reacts to yesterday's lows, and if we dip our toe into the unfilled gap, what do we do? What do we do? Now, if you get support in an unfilled gap, and the market is not that weak, right? You should get a bounce. Now, if it goes you support, if you retest, this could cause a nice big surge back up to the mean, to the 69.09s. And then what? We kind of wait for Apple and Amazon, right? That's a nice de-risk right there. You could even test the bottom of this area, 68.65s, as well. Still this big gap, right? You can fall right here and have everybody thinking, uh-oh, we're going to fill the gap. Let's say we go like this, and then we can go into the mean. Now, if we really have some tempo today in volatility, okay, all right, we could also just go right to this low and get bought as well. Okay, so we could do this. Whoop. Okay, so this is all viable. Now, if people are short from these highs yesterday, which they clearly are, and if we want to stay in balance, this could be a pretty nice monster trade here. Okay, if you want to hold this, this could really take off. And I would think we don't go much higher because of the Apple Amazon. But if you're conservative, let's say, right, and you're like, no, I want to see what we do with 6908, because this is my feeling. Shorts are getting paid right now. If you come back and you test the 6908 and you start to hold it, that also could be a long target top bounce. Okay, that is the longs. I can't even believe I'm thinking about, wow, I could get a trade today in futures. I'm loving this volatility now. Okay, now shorts. All right, this is how we're going to play this. Okay, I don't think it's as easy. Okay, I don't think it's as easy. Now, one play could be you push down, you hit yesterday's lows, you do get bought. But now we have the most traded price right here. I want to see how the market reacts to this, because if it comes up there and tries to go higher, cannot find acceptance and retests, that's your short. And then you hold on. You might want to take some off at the top of the gap and see if we can break this. If you break this and the market continues to get weak, we're filling the gap. Gap fill, 66, 68.41s. It can get pretty nasty after that. Now the market could bounce. Remember, we have Amazon and Apple earnings from here. It could definitely do that. Okay. Also, if you do rise up, you could tiptoe into the supply, go under, and then you got your short. Not easy. That's trade's not as easy. It's really not. Okay. Now, if we do open, let's say, market's still pushing down, right? If we do open in here and we start to get this move, but the market's not that strong, right? And we get a quick move up here, anywhere in this supply, we could also do this and come back to the mean. Okay? That's the ES. Now, like I said, you got to think in terms of balance. Even if you're here, let's say, traders all up in here. If you short it up in here, you're getting paid. So just think about it. Shorts, we're getting paid. And now what are we going to do? Probably take profits, some people, at this low. Probably take profits at the gap fill. Just think about that, which would cause shorts to become buyers, new buyers come in, and that's where you do this, right? That's the reason I am looking at that trade. Okay, now internals will drive my trade. Now, if we move over to the NASDAQ, looks pretty similar. So it's pretty easy here. Okay. Your 26399s, 264 basically, you got supply here. You got supply. All right. Our most traded price of the 24 hours is 26260s. Right here. Okay. And it's going to be all about this demand zone down to the 260s in this gap. And I'm doing it with the wrong color. So let's just do that again with the right color. This is that gap. That light blue box is a gap. Another blue box is a gap. Okay. Week to date VWAPs right here. We're right on week to date VWAP. Okay. This is our mean. you're going to have two sessions that are equivalent to each other. Almost. Okay? Let's get into scenarios. Here we go. Same premise, right? So, coming into the week to date anchor view up, what are we going to do when we hit yesterday's lows? What are we going to do when we hit the unfilled gap? I don't know. But it could be a very well bear trap. So we can hit. I would think we get a little bounce, but then let's say we move into this gap. Maybe we fill it, right? But this is in the demand zone. Okay? If it holds, and the market's not that weak, you could definitely look at the thin volume, definitely go back up into this mean. Wait for Apple and Amazon, right? There's a lot of demand here. Remember, around here, the structure is not as good. Okay? So this is different from the ES in one way. Is the ES can move up and it can reach that mean. This has a far away. And I think that this is actually a better structure. You have very thin volume here. Okay? It's running out of participants here. So that's not going to be hard to cut back through it. Okay? This is really what I'm looking for. 260s. Hold it. Probably a long. I don't have as many scenarios as much as I did in the ES. All right? So let's go to short. And the short is a hard one here. It's not easy. A lot of demand. Okay? It's not an easy one. For me, I'd have to take out yesterday's lows, fill the gap, somehow take all this demand out, and maybe like start to find acceptance here to maybe me thinking to go here. Now you do have supply up here. But I think that the odds that you get a nice short all the way up here are not very good, not that great. They're not. Okay? Could it happen? It could. You'd have to wait for this. Push all the way up into here. Maybe top that out, lower high, and go back to the mean. It's not a great... It's like I said, this is a lot harder to have a short here. Okay? All right. That's the scenarios, folks. That's my analysis for today. Please smash that like button if you enjoyed that. Thank you, thank you. Please join me every morning. Let me be your morning cup of coffee. Give you the market news, the economic calendar, leaders and laggards, just a bunch of technical analysis, and I gave you the long and short trade scenarios just there in the ES and Nasdaq futures. Okay. Now today, I think we're gonna have some nice movement. I think that bear trap is very real. Okay, very very real. All right. Now, hopefully, if you want more in-depth coverage, you're going to join my Discord. That's Confluence Trading. Go to the YouTube homepage, click on the link, sign up. What are you waiting for? Let me be your indicator. I will not steer you wrong. Trust me. You don't have to. I'm not an alert service. Use me as the indicator. Go, hey, I like to trade this way. Steve said the move's probably in, down to the downside. And remember, anything I say is a snapshot in time. It can always change with a news catalyst. But sign up. Okay, sign up. Get my free indicator as well, the expected move. Okay? Everybody, have a great day. All right? If I don't see you in my Discord, I will see you tomorrow morning. All right? Take it easy.